Good afternoon, everyone, and welcome to the Accordance VAT Recovery webinar. My name is Laurent Doggett. I'm the Head of Consulting here at Accordance, and joining me today is David Stokes, Senior VAT Consultant. So today we're going to be talking about VAT recovery in the EU. It's going to be a 45-minute presentation with 15 minutes for questions and answers, hopefully. If you'd like to ask a question, please ask the question via the webinar control panel. There should be a question section which you can type a question into, and we'll do our best to get to that question. So just by way of introduction then, so the webinar today is about VAT recovery. We are focusing on EU VAT recovery, but it's important to point out that VAT recovery is sometimes possible in countries outside of the EU, but today our focus is on EU VAT recovery. So most businesses are entitled to recover VAT they incur in the EU, but a lot of VAT, estimated up to 20 billion per year, goes unrecovered, and this is because taxpayers don't make the claims they're entitled to. It may be because they don't know that VAT can be recovered, or maybe they forget to make the claim because there aren't sufficient processes in place. But also we're going to be talking about the increase in the austerity within the EU, the tax authorities' approach to repaying VAT which has been incurred by businesses in their countries. They are increasingly delaying or denying refunds whenever they are legally able to. We also talk about not submitting a claim or making an incorrect claim, and that can result in significant cash flow issues for taxpayers. And therefore, really our objective today is to give a clear overview of the VAT recovery process and explain how Accordance helps its clients with making successful claims. So we have 6 main items really today on the agenda. So we're going to give a brief introduction about the background to VAT recovery, which type of businesses should make a claim, how to submit the claim, what to do once you've submitted the claim, how to manage that claim once it's been submitted, how Accordance can help, and also no presentation would be complete without a quick mention of BREXIT. So background to VAT recovery. So really VAT recovery involves obtaining a repayment of VAT which has been incurred in another EU member state where a business doesn't necessarily belong. It doesn't have any kind of establishment there or VAT registration. There are essentially 2 different VAT recovery procedures. One is called the EU Refund Directive, formerly referred to as the 8th Directive Refund Procedure, and this is the process for businesses which are established within the EU. So that's if you're an EU established business and you've incurred VAT in another EU country, then that's the process that you must follow to recover that VAT. The other process is what we call the EU 13th Directive, and this is for all other claimants. So this is if you're a non-EU established business, then you must follow this process for recovering EU VAT. The methodology and conditions for both types of claims are fairly similar, but there are some significant differences which must be kept in mind, and we will talk about those in a moment. So to make a claim for VAT, there are generally the following conditions that must be met. So the first, and probably one of the most important ones, is that as a business you must not be VAT registered or have a liability to be VAT registered in the EU member states where you are recovering that VAT. The second condition is that you must not have a place of business or residence in that same EU member state, and you must not be making any supplies in that EU member state except for a couple of exceptions, which are transport services related to the carriage of goods, or goods or services where the person you are supplying to is responsible for the accounting for the VAT. So that's what we call a reverse charge. In addition, for 13th directive claims, you must be registered as a business in a non-EU country. So, for example, if you are a US business and you are seeking to recover VAT in the EU, you must be able to demonstrate that you are in business. So that is often demonstrated by the 6166 certificate in the US, so certificate of taxable status in the US. Other countries will have similar processes for proving that they are a business in that other country. It's also actually important to note that there are some countries, there have been some changes recently, where that even if you are registered in that country, you do have a VAT number in that country where you're seeking to recover VAT, unless you have made taxable supplies during that period, you would have to make a recovery of VAT via the refund process. So although point A says you should not be registered or have a liability to be registered in that member state, there are some exceptions to that rule, namely France and Spain could be a couple of examples where although you are registered in those countries and you have VAT numbers, if you haven't made any taxable supplies in that country for that period, you may have to submit an 8th directive or an EU refund claim as opposed to recovering it in your VAT return. So for a claim to be successful, the following must be complied with. First of all, and quite importantly, which just gets overlooked quite frequently, is that the VAT being claimed must have been correctly charged in the first place. So a lot of people, a lot of businesses we talk to will just assume that the VAT incurred has been correctly charged and therefore throw it into the claim and just assume it's going to be paid out. Unfortunately, as with UK law, EU countries apply exactly the same rule. If VAT has been charged incorrectly, then you must not recover it. So if you try to recover VAT which has been incorrectly charged, it will be denied. You must also have fully compliant VAT invoices. So it's important to make sure that when you are receiving invoices, you are checking these invoices to make sure they are valid from a VAT point of view, and we can certainly provide you information on what is and what isn't a valid VAT invoice. And you also need to submit the claims by the required deadlines, and the deadlines are different depending on whether you're submitting an EU refund claim or a 13th directive claim. So for all EU refund directive claims, the deadline is the 30th of September of the year following that in which the VAT was incurred. So if you incurred VAT in 2016 calendar year, you must submit a claim by the 30th of September 2017. For 13th directive refund claims, the deadline is different. It's actually a bit sooner, so you've actually got less time to submit that claim. So therefore, you need to submit the claim by the 30th of June of the year following. Just to point out that if you are recovering VAT in the UK via the 13th directive method, the actual deadline is different because the UK, for whatever reason, decided to operate on a different year basis. So their year runs from the 1st of July to the end of June, and therefore you have 6 months from the end of June to submit that claim. So the actual deadline is the 31st of December. And also for 13th directive claims, it's really important to consider whether there is reciprocity requirements between the claimant's country and that country in where the VAT was incurred. So for example, if you are a US business, you might not be able to recover VAT in countries such as Spain or Portugal because there are no reciprocal arrangements in place. And it's always good to know that in advance of incurring the VAT in those countries, obviously. So who should make a claim? So really any businesses can incur VAT in another country, but there are some businesses which are more likely to incur VAT as a cost than others, and those which are likely to have to submit claims as opposed to recovering the VAT via a local VAT return. So we've listed a few examples here. So maybe a local purchase or import occurs before an onward local sale of goods subject to domestic reverse charge. So as I mentioned previously before, a domestic reverse charge is where the recipient of the supply of goods or services accounts for the VAT on behalf of the supplier. Therefore, the supplier is not making any taxable supplies in that country, therefore they are not permitted to register for VAT, yet they're incurring VAT in that country. So they can't recover it via a local VAT return, so the only way they can recover it is via an EU refund claim or a 13th Directive refund claim. Other instances, so you might be making a local purchase of equipment which is then leased out. You may be purchasing goods locally which might not be directly sold but used to make other supplies. Conference and event organisers often incur VAT in relation to the event itself, but because they are providing the supply from their place of establishment, then they may not be able to recover VAT via a local VAT return. So we often help businesses in that environment as well. And the last bullet point we put down there is land-related services, where local suppliers may charge local VAT, but the onward supply again is under the extended reverse charge or the domestic reverse charge. So in terms of making a claim, I'll pass you over to David Stokes, who will guide you through this process.
Thank you for that. Well, as already been mentioned, there are two requirements when making a claim. The first one is that the VAT that you're claiming has to have been charged correctly by the supplier, and the invoice that you've received has to be a compliant invoice. So looking at correctly charged VAT, as we mentioned earlier, there is an extended or general reverse charge that can apply to lots of services or goods, and where your supplier gets that wrong and charges you VAT incorrectly, then you're not entitled to make a claim to get that money back. If you do so, then the legislation allows for penalties, and we have seen the UK, Germany and a couple of other countries actually raise penalties where people have knowingly or unknowingly submitted a claim for VAT that was charged incorrectly. So the claim will be rejected, you will get a penalty, and the correct approach is to actually go back to your supplier and get a credit note. But that assumes that you will understand when the VAT has been charged incorrectly, and this is why we say it's important that all invoices are actually assessed before the claim is made. Firstly, to guarantee that you get the recovery, but also to guarantee that you don't get a penalty from the tax authority you're claiming from. So that deals with the VAT being charged correctly. The second issue is that you actually must have a valid VAT invoice. So only invoices that are fully compliant can be submitted as part of the claim. Now, you don't actually submit the invoices when you make the claim, apart from in certain circumstances, but one of the conditions is that you are in possession of a valid invoice, and the authorities can ask for it if necessary. So it's still important to make sure the invoices are correct. So EU legislation dictates there's a minimum requirement for VAT compliant invoices, but unfortunately that doesn't mean you've got a standard approach across all of them, because some member states of refund can impose their own local requirements which may be different to your own country's requirements, and therefore you're not aware. So for example, in Portugal, your VAT number is required to appear on your supplier's invoice. If it doesn't appear, then that's an invalid invoice and the authorities can reject your claim. Now, we mentioned that about valid invoices. You only have to submit invoices in certain circumstances. That's where the VAT is in excess of €1,000 or €200 if the invoice is for fuel. But as we said, you have to be in possession of the other invoices, and you can be asked to provide them. When you do provide them, it's normally by email or in an electronic format. Okay, so that's the refund directive. For 13th Directive claims, so this is non-EU companies claiming into the EU, you still have to submit the original invoice with the claim. And where invoices are non-compliant, they will be rejected. And again, this reinforces the importance of reviewing invoices before submission to make sure that you've actually got the compliant invoices. Making the claim, you have to make the claim normally via your local tax authority. So if you're making a claim into the EU, you'll do it through your local tax authority. So in the UK, you'll go to HMRC portal and you'll submit the claim to all of the countries you're going to on that one claim. So you'll do it all in English, and therefore you'll have no problem. And similarly, if you're a French company, you'll submit on the French portal. So again, that can all be done in French. Submitting 13th directive claims is more difficult because it has to be done in paper and it has to be done in the language of the country that you're claiming from. So the other issue is that you'll have to have a representative in some countries. So if you're a US company, you have to have somebody in France, for example, who will help you to manage the claim, and therefore you might, because the conversations might need to be done in French. So there. Okay, so what happens if you get it wrong? Well, if you submit a refund directive claim, as we said, you don't submit the invoices anymore, so you're effectively self-assessing whether you're entitled to make that claim or not. So it is possible that you can submit claims for that, which is either supported by invalid invoices or not actually due. And we have seen situations where tax authorities will raise penalties for such errors. They'll be quite harsh, and they'll ask you to detail the procedures you had in place to ensure that the claim was valid and that you were entitled to make it and so on. And based on your responses to that, they'll then decide how harsh the penalty should be. Okay. So it's important that the claim is managed properly from the time you submit to the time the tax authorities come back to you, and I'll pass you back to Laurent to deal with how to manage the claim.
Okay, thank you, David. So yes, managing the claim after you've submitted it then. So the expectation is that you've reviewed the invoices, you've submitted everything, and now you're just sitting there waiting for the tax authority to pay you back the money. Unfortunately, it doesn't always work like that, and the tax authorities recently have been a lot more, been looking at claims a lot more closely to make sure that they are valid and they are correct. So they often do raise questions for all sorts of reasons. Typically, well, by legislation, tax authorities have 4 months to make a decision about the claim you've submitted. And once they've made that decision, they then have 2 months to make the payment to you. But it doesn't always work like this. Some tax authorities are notoriously slow in making a decision, and also notoriously slow in making the payment. There are some countries which have typically or historically been quicker, but even recently we've experienced evidence of those tax authorities being quite slow in making decisions and making payments. So we mentioned that they can be slow, but this could be because they raise queries, and the queries could be raised for all sorts of reasons. So really, submitting the claim is just the first step to actually receiving the refund of VAT. So although you've submitted the claim, you still need to consider having resource available to deal with any post-claim or post-submission claims. One of the main issues in managing the claim is to do with language skills. So although, as David mentioned, if you submit an e-refund claim, it's done in English. Any queries you might get through back from the tax authorities may be made in their own local language. So it's then down to you to understand what exactly that query is. This is also the case for 13th directive claims which are made. They will nearly always be in the local language. So your business therefore needs to have the language capabilities to manage any queries, and if these skills aren't available, then these questions may get missed or answered incorrectly, and this could actually jeopardize the claim. One of the prime examples we deal with is where our clients receive a letter at their offices. It's all in Polish or another language which no one speaks, and then it just sits there with the receptionist or department that doesn't know what to do with it, and by the time it gets into the right person's hands, it's too late to respond to the tax authorities, and then invariably the claim will be denied. And if we're talking about thousands and thousands of euros, that could be quite an issue. The other issue in managing claims once they've been submitted is where the tax authorities raise a query and it's related to a particular type of VAT issue, and this is the opposite really of a non-compliant invoice. So then if there is a query which relates to a particular VAT issue in that country, then you have to consider the local VAT rules of that member state. And if you are unfamiliar with those rules, again, that may invalidate the claim. So therefore, it's really important for businesses to understand the local VAT rules so they can respond to any questions from the tax authority. If there is a pressing matter, it's probably because the tax authorities have set a very strict deadline. So, and a prime example of that is Poland, where you are normally required to respond to any queries in respect of an EU refund claim or 13th directive claim within 7 days. And if you don't meet that deadline, then it can potentially mean that the claim is lost. So again, it's really important to understand the local VAT rules, to have a process in place to make sure that any queries raised by the tax authorities do get answered correctly and on time. Another aspect is new invoices. So where a claim is rejected or partially rejected because of non-compliant invoices, it's often necessary to get new invoices issued by the supplier. So those invoices would be corrected invoices, but this may not always be possible because maybe the supplier has no longer exists. They can't issue reissued invoices. So again, this could potentially put the claim at risk. Again, where the supplier has gone into liquidation after making the supply, that can certainly be an issue. So there's a need to rely on suppliers for new documents, and it also applies to the need for credit notes to be issued where the VAT has been incorrectly charged. So something we always say to our clients is that you shouldn't only just consider the invoices before making the claim. You should actively be checking invoices that you receive, that you make payments for, to make sure they are valid so that you can address these issues at the time and not have to worry about submitting a claim which has got incorrect invoices or potentially not being able to receive reissued invoices or credit notes after the issue has arisen. So Dave, how can Accordance help?
Okay, thank you. Yeah, so we've been making claims into the EU for a number of years now, so we're aware of most of the issues that will come up, and we can then help to do this, help to make sure the money comes back. So we provide, the first thing we do is provide expert analysis in the first instance to verify that claims can be made and to give you confidence that if we say we're going to claim make a claim for this amount of money, then actually that is the money that you will get back. Now, we've mentioned a number of reasons why claims could be rejected. The first one is that actually your supplier shouldn't have charged you VAT because a reverse charge of whatever format applied. So that could have been because it's a local supply where the extended reverse charge applies. But more recently, we're also seeing situations where tax authorities are saying, well, there wasn't a definite reverse charge available, but actually your supplier could have exempted this supply. And because he could have exempted the supply, we're going to assume that he should have exempted the supply, and therefore we're going to deny the VAT. And this happens where there's a cross-border purchase of goods and you forget or you just don't give your supplier the evidence he needs to be able to exempt his supply to you or zero his supply to you. Now, that's a bit harsh because if your supplier doesn't have the evidence, then he's not allowed by his own law to exempt the supply. But we've seen the UK do this where to one of our, a client in Ireland who bought some goods from a UK supplier, they didn't provide their Irish VAT number, so the UK supplier, according to the rules for that supply, correctly charged UK VAT. The Irish company through us then submitted the claim. We considered it was correct because the invoice was correctly raised. HMRC came back and said, yeah, but if the Irish company had given his VAT number, then the UK company could have exempted the supply and therefore the claim wouldn't be necessary. We thought it was a bit harsh. We appealed. We lost the appeal. We then had a similar one with the French company where a French company had a car repair and the part was put into the car and the car was driven back to France. The UK garage charged VAT. HMRC said that the part obviously got removed to France and therefore the exemption should have applied. We appealed this one and we won. So there are some fairly odd reasons now why HMRC or other tax authorities will actually find ways of denying that. As Laurent said earlier, it's all about the austerity. They're finding any kind of wrinkle, and it's almost, you almost feel like they're just trying to make you give up. They just keep coming back with silly reasons. And one of the reasons we haven't mentioned yet is that actually your claim could fail because you're actually required to be registered for VAT in the particular country. So the activity that you're doing means that you actually have a need to be registered for VAT, and therefore that the claim will fail. And this quite often happens in land-related services where the place of supply is where the service is being provided. There's not an extended reverse charge in that supply, and therefore a UK land-related company, for example, would have to get a VAT number in a particular country and charge VAT. So on the one hand, your claim can fail because you were charged VAT incorrectly, or your supplier issued an invoice incorrectly, but it can also fail because you weren't aware that you were obliged to actually be VAT registered in that country. And then that's quite an issue, because what you then have to do is get a backdated registration. You then have to charge VAT retrospectively to your client. Your client then has to obviously deal with that, and there could also be penalties for your late registration. So again, when we're making these claims, clearly at the point we make that, we will still have to go back and retrospectively register you, but it's another thing to bear in mind when making a claim. Are you actually entitled to make the claim, or going back to the very first slide, are you liable to be registered for VAT in the country where you're making the claim? So that's the kind of analysis that we'll do to make sure that the claim is actually the right way to go. If in fact we decide that the claim shouldn't be made because the reverse charge applies, then what we need to do there is to go back and get a credit note from your supplier for the VAT that was charged incorrectly. As Laurent mentioned earlier, there could be timing issues if your supplier no longer exists, or has been taken over, or merged with somebody else different VAT numbers. There's loads of reasons why a credit note might not be issued. But then in France, there's a particular procedure which says that foreign suppliers can't issue credit notes with VAT, because then you've got the possibility of getting the money back twice, once from the tax authority and once from the supplier with the credit note. So it's particularly important to make sure that you don't get charged VAT incorrectly in France, because the procedure then is you actually have to put the claim in, get the claim rejected. You then have to submit a waiver to say that you waive your rights to get a refund of that, and then once you've got that refund waiver, you can then go to your supplier and ask him to issue the credit note with VAT, using the authority given by the French tax authority after the procedure. But that can be a long time. So the short answer is make sure you get it right before you even put the claim through. Okay, so we have consultants such as Laurent and myself. We also have compliance managers who deal with VAT returns and other things. So we're expert knowledge of the VAT rules and procedures across all of the EU member states. So that, as we've said, we will only submit a claim if we think it's the right way to go, and if we're confident that we've actually got the documentation that we need to support the claim. And where you should go for a credit note, we'll ask for a credit note, and sometimes it means we have to explain to your supplier why he has to issue the credit note. Obviously, he's got to want reassurance that he's doing the right thing, because otherwise he's got an issue with his tax authority. So it's important for us to explain to your suppliers why the credit note applies. And the good thing about doing that is that hopefully we can stop them issuing making the same mistakes in the future, so you then reduce the need to continually submit claims and have them rejected for being wrong. And we offer all of this from our central office in Brighton, where we have all of our consultants and compliance team together, so we can offer you a proper joined-up service to make sure the refunds are successfully made.
Okay, thanks, David. So the final point really is about Brexit, because it looks like it's happening. And really, what does that mean in terms of VAT recovery for businesses in the EU? So really, we're looking at mostly UK businesses here making claims into the EU, but there are some considerations for EU businesses making claims into the UK. So after March 2019, we will no longer be filing, well, it's likely that we'll no longer be filing EU refund claims. We'll no longer be in the EU, and we will be making 13th Directive claims. So under an EU refund claim at the moment, we make that claim via HMRC, via their portal. But this will change to the 13th Directive process, which is a manual paper-based claim. it's much more onerous. You have to send in all the invoices, complete all the paperwork. There are different deadlines which will apply, as we've highlighted previously, and you'll also be required to submit the claim likely in the local language as well. So that's really important that you are aware that if you are incurring expenses, VAT in the EU over the transitional period, then you need to plan ahead to make sure you are able to recover this VAT when Brexit happens. There will also be likely additional paperwork. So often when you're filing 13th Directive claims, you have to provide additional information about your taxable status. You may have to appoint a local fiscal representative in the country of claim. So as an EU business at the moment, as a UK business, you're not required to appoint a local representative because you are part of the EU. But once we leave the EU, then according to the local rules in the country where you're making the claim, you may be required to appoint a local representative to submit that claim. And without that representative, you may not be able to make that claim. In some cases as well, when you submit a claim via a representative, you're also required to lodge a bank guarantee, and that bank guarantee could be required to be in place for several years. So again, that could be a cash flow issue for UK businesses. And so really, it's a lot of things to think about. No one is really quite certain what's going to be required for UK businesses making claims into the EU at the moment, but these are all the sorts of things that are likely to occur. The last point on there is reciprocity. So this is the point you mentioned earlier, where for 13th Directive claims, some tax authorities will deny the recovery of VAT to businesses located in a non-EU country where there are no reciprocal tax arrangements or agreements in place. So it's yet to be determined whether the UK and EU countries will have reciprocal arrangements in place. Hopefully they will, otherwise a lot of UK businesses may not be able to recover VAT in the EU. Looking at it from the other way around, so for EU businesses making claims into the UK, well, that could be a reciprocity issue. So will the UK actually permit EU businesses to recover VAT that's been incurred in the UK? That's something we don't know at the moment. We assume things will probably stay the same, and the tax authority will allow businesses to recover VAT. How that will be done is yet to be determined. It could be via the similar method we see for other non-EU countries such as Norway and Switzerland, but this is something that we are yet to hear from HMRC about. So we are a little ahead of schedule, so we've got a few extra minutes to answer any questions that you have. This is our contact details, but we're happy to receive any questions you might have at the moment. We're just having a look at the questions here online. Let's have a look at these. Okay, so the question we've received is about EU VAT recovery. So obviously Accordance does EU VAT recovery, but do we recover VAT outside of Europe? So the answer to that is yes, we can and we have recovered VAT outside of Europe. I've mentioned already Switzerland and Norway, but there are other countries that do permit VAT recovery or GST recovery. The methods of recovery will differ. So for example, in Australia, if you incur GST, you would normally have to register to recover the GST in Australia, but that does still mean you can recover that GST. And in fact, the Australian tax authorities have been talking about making it easier for non-resident businesses to recover GST via a similar process that we have at the moment in the EU for 13th Directive claims. So in answer to that question, really, yes, we can recover VAT outside of the EU. It just depends on whether that country permits refunds to be made, and also what processes are required to recover that VAT. Let's have a look, see if we have any other questions. Okay, how can we ensure that our supplier's invoice is fully compliant, and what happens if they refuse to amend an invoice? Okay, so this is quite a common question. So this is a point I mentioned before, really. So you as a business need to be checking on a regular basis that the invoices you are receiving from suppliers are compliant. Hopefully that there would be some internal knowledge as to what to look out for on an invoice as to whether it's compliant. So the typical things are it has VAT number, it has the address of the supplier and the customer, that the VAT amounts are correct, that the VAT rates are correct, and all the other details and content on the invoice has been provided on the invoice. If it turns out that the invoice is not fully compliant, then you would have to go back in the first instance to that supplier and say, look, this invoice isn't correct because of X, Y, Z. If they don't correct it, then what we can do in those instances is approach the supplier on your behalf and therefore give them the legal requirement, the legislation which says this is what a VAT invoice is, and this is what is missing from the invoice you provided to our clients, and therefore hopefully with that a bit more information and some legal references they would change the invoice. If they still refuse to do so, then it almost becomes more of a kind of a commercial or a legal issue, and it can sometimes come down to your relationship with that supplier. If under extreme circumstances they still refuse to correct an invoice, then in some cases that invoice may be submitted, and if the tax authorities decline or deny the VAT in relation to that invoice, then we can use that evidence as proof to the supplier that they have an incorrect invoice and they do need to either issue a corrected invoice or a credit note. Okay, so David, do you have a question there you'd like to go through?
Yep, hi there. So we've had a question come in that says, do we do VAT recovery related to pan-European events? I guess this means events that are happening in more than one country at the same time. And then the question was, if so, does it take longer than standard VAT recovery? If you actually, if you have a pan-European activity so that you're incurring VAT in multiple jurisdictions at the same time, you actually have to submit claims into each of those individual countries. So even though you'd see your activity as one activity embracing several EU member states, you'd actually have to submit claims into each country individually, albeit via the portal if you're an EU company, or on separate paper claims if you're non-EU business. I hope that's answered the question, but if it hasn't, then please come back to us with another one and we'll deal with that as well.
Okay, we have another question. The question is, do you think it would be prudent to register a German subsidiary to stay within the EU and keep VAT reclaims simpler? Well, possibly. You might be able to establish a German sub if that German sub is obviously doing taxable supplies in that country. Without making taxable supplies, then there would be no basis for a registration. So it might not solve the solution, it might not solve the problem, but it's something possible that some businesses are looking at. It's probably more of a wider Brexit question that some of our clients are looking at the moment, whether they need to establish an EU base to effectively keep within the EU to make VAT reporting more straightforward or take advantage of some EU simplifications. At the moment, it's quite difficult to provide any advice because we're uncertain, just as uncertain as the government is as to exactly what it's going to look like after 2019. But yes, it's possible in some cases if you are able to set up a German subsidiary or any subsidiary in another country, then you may be able to recover VAT locally via a local VAT registration.
So, hello. So the question I asked a moment ago, we've got some more information for it. So it's basically a Belgian company organising an event in another EU country, just one. How long is the standard time to recover VAT? Well, as Laurent mentioned earlier on, if you make a refund directive claim, this would be a refund directive claim since it's a Belgian company, then the directive says that the authority has to give a ruling within 4 months of the claim being submitted, and that's for every EU member state. So the time, the standard time, if you like, regardless of which country you're claiming into, is that the authorities have to give you a decision within 4 months, so long as they have all of the information they need to make the decision, and that's their get out. They can just keep coming back with question after question, but obviously it has to be a valid question. But there are no different times depending on the type of claim you're making. It's 4 months from the date you make the claim, and then the payment has to be made within 2 months of that. So I hope that's helped.
Okay, we've got a question about how severe penalties can be for submitting incorrect claims. That can depend on the country involved. By example, actually today I was looking at a claim that was submitted, not by us, but by someone else, and there was an incorrect invoice that was submitted. Someone submitted a claim in the UK which included business entertainment. And that's obviously excluded from recovery. So the UK applies some kind of a sliding scale, basically depending on whether the error was prompted or unprompted, whether it was a careless or deliberate and concealed submission. In this instance, it was a careless and prompted error, which basically includes a penalty range from 15 to 30% of the VAT. So it will depend on the country in question. And we are seeing more and more tax authorities pushing back with queries and also penalising businesses for making incorrect claims. I don't know, David, if you've got any other experience in terms of penalties that you may have seen for businesses that have tried to submit claims.
Well, the main one to mention was in the UK, where the company, as far as we were concerned, had received correctly charged VAT because the supplier didn't have the necessary evidence to be able to exempt the dispatch. Nevertheless, HMRC decided that, and this wasn't really the harshness of the penalty, it was the harshness of the decision. And that HMRC decided that actually if the supplier and the customer had gone the extra mile, they could have exempted the supplier, and therefore no VAT would have been charged, therefore no VAT claim would have been made, and therefore a penalty is due. So, I mean, in that case, so we tried to fight it, we were unable to, and then we had to get all sorts of questions. So it's not just the quantum of the penalty now, it's the silly reasons why they're saying penalties are due, is what I think is happening more now. We just seem to have another question coming in, so. Okay, yeah, so we're being asked if we're actually able to contact suppliers on behalf of claimants to get new invoices issued. Yes, we are. It's really a question of how you give us the authority, or on what basis you want to do it. Sometimes we write emails that you can send yourself to your supplier. Other times we'll contact the supplier directly on your behalf. So it really does depend on what you want. Sometimes when we might be having to contact your supplier instead of you is if you're a French company and your supplier is Polish, for example, then we have the language capabilities here to be able to write to your Polish supplier and ask for the credit note, which you may not be able to do. So it really depends on what you want us to do. Hope that helps.
Okay, another question. Does a claim have to be made annually? Can I make monthly claims? So for e-refund claims, you can make an annual claim, but you can also make quarterly claims as well, and there are minimum claim amounts. But obviously the more frequently you claim, the more work is involved. But if you are in a repayment position fairly frequently and you want to recover that quickly, then you are able to make quarterly claims in the EU.
Okay, we've had one more, which is now relating to electronic invoicing, which is quite an interesting topic. So the question is, can we use are electronic invoices acceptable for 13th Directive claims? You may remember during the presentation we said that with 13th Directive claims you have to submit every invoice with the claim because the authorities can then audit the claim before they pay out. Where the invoices are electronic, it used to be the case that they weren't able to be accepted, but now they are acceptable, but only if they're issued in PDF format. But some authorities will still be a bit awkward about it. But yes, electronic invoices in PDF format are generally accepted by the tax authorities.
Okay, we've also received some questions about our pricing. I think I probably won't mention exactly how we structure our pricing. It depends on the type of claim, the amount of work involved and the value as well. What I would say is that if you do have particular questions about that, our sales team will be in contact with you if you do have any other questions that are unanswered today in terms of pricing. So I think that looks like it's all of the questions answered. If you do have any questions, then obviously feel free to contact us on our email, or you can go to our website or Twitter or LinkedIn, and we'll do our best to get back to you as quickly as possible with any answers to questions you have. So we finished a bit early, but thank you very much for joining us today. And if you do have any questions, please feel free to get in touch. Thanks very much.